right, guys, so here is the silver December contract, the monthly continuation candlestick chart on barchart.com, my favorite free commodity market website. It's also great for equities and whatnot. But so here we go. So in the throes of a strong downtrend, could this be a cup and handle pattern? Could this be a price that's rounding and heading higher? Or is this little dip, does this portend things to come? Or are we going to be in a range? Well, let's look at some evidence. The ADX, the average directional index, and the ADX mod, the modified one. I like them a lot. We are pushing lower. We did pop up here, and we're now closed. Last month we closed below, the monthly close was below the exponential moving average, and now we're pushing even lower. Is that bearish? Well, we'll see. It's all about evidence, right? So the evidence of will this move continue down, or what might happen. So when the minus DI line pinches down, and here it's pinching down twice, a little pinch right here, that's normally pretty bearish. Again, no guarantees, but here we saw a little double pinch down, and the price fell. So it doesn't mean it's going to continue, but the fact that this double pinch down by the red minus DI line, I think is mildly bearish. And then as well, what's really important to look at is the COT report. The Commitment of Traders report comes out every week. The commercial speculators. Now look at this. This is a 20-year look back, and the commercial speculators are at the shortest that they've been in 20 years. So all the way back to 1992. So that's pretty strong evidence that we might see a follow through to the downside in the silver. I really like when the commercial speculators are record long or record short, because that's a strong piece of evidence that a market's going to either go up if it's record long historically, or that the price is going to go down if the commercial speculators are record short historically. Again, no guarantees, but just evidence. I look at being a trader as like being a lawyer. You're stacking evidence up to see if you should be long or short or flat a market. So the double pinch down for the minus DI, the double pinch down here, and the record, historically record short levels by the commercial speculators. I think that portends a potential bearish move down. Also, the secondary and tertiary indicators, the DPO, the RSI mod, the stochastics RSI, they're rounding. I like the fact that they're not way up, that they're not way down here, rather. But we're up, so I think we could potentially round downwards and see a price move downwards. We've got room to head lower. This has been an overbought territory for a while, and we're not in oversold. We haven't spent months and months and months in oversold territory. So again, these are three secondary, tertiary indicators, but I still like to look at them. There's a lot of evidence here. Let's look at some other evidence. Let's look at the dollar. The dollar it popped up here nicely. I really like 2s and 3s. I really like flat boards. So when the ADX gets flat and they're sort of pinching up here and creating a sort of a flat board, and I love it when a price is sort of in a tight range, which it was here for almost a year, right around a year, and then boom, the market moved up. I mean, it could have moved down, but these indicators, I think are suggesting a bullishness. So whichever way the red minus DI line is pointing, whether it's a flat, sort of a flat surface, or the jagged, the double or triple pinch up, and also here the commercial speculators were sort of flat and pushing up, which generally, is generally constructive. And we saw a nice pop here. Well, what's happening now? Well, we've been in a range 95 to 10 to 100, so we've been in like a 5-point range. I love when markets are tight in these tight ranges for 6, 12 months plus, and it's been about a year, maybe a little bit more. And we broke out over 100. We are getting along this market. I think we're going to hit 105, maybe even 110. If this is a cup and handle pattern, then we could even see 120 ultimately, in the coming months. But I don't know. I think, you know, um, but I do think there's strong evidence that suggests the dollar rally is going to continue. Here's a double pinch up, the little M here, and the little M here, the double pinch up, which I think is constructive and somewhat bullish. And then also this flat board. When the commercial hedgers or commercial speculators have that flat board, they pinch up strong and they're flat for a bit. I think that's pretty constructive. So I think this dollar rally is going to continue. There's a lot of fundamental reasons why as well, which I don't have time to go into in this video. But if you ever want to contact me, send me an email. I'll send you an ebook. We can talk about fundamentals as well. But I only have time to really go over the technicals. So this stuff, coming off of oversold territory, we haven't spent a lot of time in overbought territory. So I think these secondary and tertiary indicators I also think are somewhat suggestive of potential bull run. If the dollar continues going higher, that generally is bearish for the metals. Here we're seeing the dollar and silver overlaid. This green is the silver. So you notice that the silver's sort of been climbing overall, dollar's been falling overall, and the silver collapsed, dollar's been rallying overall. This, again, looks like we could see a potential cup and handle pattern. And I think that's bearish the silver. I think that silver could push down a bit as this dollar, I believe, will continue to go higher. So here's the weekly chart on the silver. I also look at the fact that when the commercial hedgers pinched up here and they have like a little flat board, like here there was a flat board, and this triple pinch, quadruple pinch up, the red's pinching up, another cup and handle pattern here, and the market exploded. Well, the similar thing happened here. We've got a flat board on the ADX pinching up, and then you've got the COT report pinching up here, but the market just popped a bit, and then it fell and it went even lower than the earlier lows. So we've got lower highs, lower lows. I think the market could be breaking down even more because even when we do have pinches up, the price didn't explode. So there's a lot of evidence. The last thing I'm going to look at is gold. I think there's a lot of evidence that the metals are going to continue to fall. Here's another piece of evidence. Well, looks very similar to silver, right? But also the commercial hedgers. Commercial hedgers are the shortest they've been in 25 years in both the gold and the silver markets. And that doesn't guarantee anything. Nothing guarantees anything. But I think it's a strong piece of evidence. And now, and the fact that we've fallen below the EMA and these monthly charts, I think look more bearish than anything. And they're still in. I think they're still in a bear market. And I think this pop up here was sort of a head fake. So if you want to talk fundamentals, please give me a call, drop me an email. We could talk some more fundamentals. But yeah, I think technically we're looking at short gold, short silver, long the US dollar.